Welcome. We're here to discuss the regional insurance sector with Murtada Parthwala, a senior analyst with Markaz Research. Welcome.
Thank you.
So, in a world where the insurance sector is huge, in fact multi-trillions, we do know that the GCC is relatively small. So can you go really into the structure of the GCC market here locally?
It's true that all over the world the insurance sector is quite substantial and huge, but in terms of insurance sector in the GCC, the story is altogether different. If you look at the total penetration level worldwide is more than 3.6%, where in the GCC you will find only 1.14%, which is totally different from the other parts of the world. And primary reason for the low penetration is the perception attached to the Islamic laws and other areas such as law awareness. So if you see the total sector as such, there is a huge potential in the insurance industry in the GCC.
But we do know that the Takaful industry is the answer, is, if you like, the Sharia answer to conventional insurance. So if that is the case and has been the case for some time, why haven't we seen that market grow?
I'm glad you raised that point. If you see the total size of the insurance and penetration level, as I said, it's very low in the GCC. But if you look at the growth level in recent years between 2006 and 2012, the compound annual growth rate of the GCC insurance sector is more than 18%, and as compared to just 4% the global average. The reason for the high growth rate is because the industry is now picking up. And one of the reasons why it is picking up is the advent of Takaful insurance, the Islamic format of insurance. So it is true that Takaful industry is supporting the insurance industry in the GCC, but then there is still a long way to go.
So can you tell some of our viewers that aren't familiar with Takaful exactly how it's structured in the region?
Takaful in the GCC is composed of very different models. We have Takaful insurance in the form of Wakala, we have in the form of Mudaraba, and there is in the form of hybrid model which combines both Wakala and Mudaraba. If you look at the total size of the Takaful industry in the region, it has grown from 2008, it has grown from 3.7 billion in 2008 to 5.8 billion in 2010. In very short span of time, it has grown quite rapidly. And the primary reason for this growth is attributed to awareness of the people and interest of the people, increasing interest of the people in insurance sector as such. And more and more we see that Islamic alternative to the conventional products are more preferred, and people are more willing to participate instead of just offering them the conventional and traditional insurance product.
So if we do have a small market, and as you say, it's growing with the potential to really increase capacity in years to come, what kind of pressure are we going to see on distribution networks? And what are the distribution networks here regionally? And can they satisfy the infrastructure? Can it satisfy this demand?
Predominantly in GCC, the sales channel used by the insurers are either agents or broker. But now we are seeing a trend towards bank being used for providing insurance and retailing insurance, and which is termed as bank insurance, and that is a growing trend. And attached to that, there is a growing trend towards online selling. Okay. So there are a number of new channels that are being opening up.
So that infrastructure, I mean, where do you see the big challenges going forward in the coming years for this growing industry?
There will be challenges in terms of providing comprehensive industry regulations and consolidating the GCC insurance sector. If you see, each GCC country has got their own rules and regulations, so which creates a lot more challenges for the insurance players in the GCC. And additionally, probably integration of the GCC insurance within each country, combined regulation could really help the sector.
Do you see outside players coming into this space, or is it very much a regionally grown?
Yes, in fact, this is one of the important challenges that the GCC insurance industry is going to face. That looking at the growth number of outside players have set up their bases in the GCC, and that has really made the market very competitive. So yes, the local players will face a lot of challenges from the outside and international insurers. So they really have to step up their processes and performance to so that they can match up with the international player if they were to survive.
So Murtada, could you take us through the nuances of the differences, if you like, in the region of life insurance and non-life insurance as it applies locally?
In terms of life insurance, non-life insurance penetration, it varies quite substantially in the GCC as compared to the global standards. In GCC, life insurance only composed of, it has only 0.2% of penetration, and it composed of only 13% of the total insurance market share, whereas non-life insurance captures 87% with almost 14 billion US dollar of market share. So most of the insurance premiums coming from the non-life insurance sector, and within non-life insurance sector, you will find that the motor insurance and property and accident insurance has the biggest share, and this is due to the compulsory regulations that we have seen from the all GCC governments regarding insuring their motor vehicles of all types. So this has pushed the non-life insurance to greater extent, and still the life insurance it is still at a very nascent stage.
Murtada, thank you for joining us today and giving us your insight into the insurance sector.
Thank you for having me.